Welcome back everyone to our Trust 101 video series. I'm your host, Gary Winter, as always, ready to help you understand trust administration better. This particular video is going to be our final video in the first phase of trust administration. And if you remember from our previous videos, there are three major phases to trust administration. The first one is to collect assets and get them appraised. The second one is to liquidate assets and pay bills. And then the third one is to distribute whatever's left over to the beneficiaries. So this particular video is our final video in that first phase. And just by way of a very quick review, just so if you haven't watched those previous videos, there are several of them, and I encourage you to check those out in the Trust 101 series on our YouTube page. And they begin with an explanation of, what is a will, what is a trust, what does an executor do in a will, what does a trustee do in a trust. That lays some foundational groundwork for how this all works and what the legal foundation for it is. And then we talked about getting appointed as a trustee, actually getting installed in that role, and then notifying the appropriate parties that are involved, and eventually collecting different types of assets. And we have several different videos on collecting real property, making sure that's in the trust, bank accounts, savings accounts, investment accounts, personal property, and things like that. So once we've done all of that, this is the last step. And today we're going to talk about appraisal. So we're going to talk about why we want to do that, who does that, how we do it, and to give you some tips on appraising the assets as our final step in the first phase. So first of all, why do we need to appraise trust assets? Well, there's four reasons. First of all, it sets the opening value for the trustee to account for. So in trust administration, the trustee has a duty to account to the beneficiaries for the assets that they're managing. And an accounting, if you haven't been familiar with those before, it starts with a beginning value of assets. So an appraisal is done at the beginning of trust administration to set the date of death value of the assets that come into the trustee's control. And later on at the end, when we get to phase 3, we'll talk about an accounting, but it generally consists of accounting for the income to the trust, the expenses of the trust, the gains on sale, the losses on sale, and then you have the assets on hand to distribute to the beneficiaries at the end. And so that's an accounting, but we have to do that first step first and establish the beginning value of our trust assets, and that's one reason why we would need to do an appraisal. A second reason we might need to do an appraisal, or we would encourage people to do an appraisal, is because it helps us establish a fair value for selling the asset. So when we go and list a piece of real property for sale, or we want to put a vehicle on Craigslist to sell it, we need to have some idea of what that vehicle's worth. And ideally, we'd like our trustees to have someone else, a third-party appraiser, set that value. So it gives us an idea of a listing price for those assets. It also will establish a new tax basis for that asset. So if you're not familiar with the concept of tax basis, you can Google it, and it's a capital gains concept. And basically, it's the difference between, capital gain is the difference between what someone paid for an asset and then what they sell it for. And under normal circumstances, you'd have to actually pay to the IRS and potentially to your state the tax on the difference between the price that you paid for it and any improvements you made to it and the price that you sold. That's called a gain on a capital asset, or a capital gain. But there is a nice exception to that tax in estate law, and the IRS allows us to step up the tax basis to the date of death value. So when you inherit a capital asset, like real property or stocks or other things like that have an appreciation built into them, you can actually claim the date of death value as your new tax basis, which means, if your mom and dad bought a house 30 years ago for $100,000, and then the date of death value is $200,000, you get to establish your tax basis at $200,000. So we need some proof to show to the IRS and the taxing authorities that this is our new basis. And the way that we do that is we establish it with a date of death appraisal. So that's another reason why we might want to do an appraisal. The fourth reason would be it establishes a value for distribution. Let's just say you don't sell the asset and we want to distribute it outright to the beneficiaries. Well, let's say your sibling who's a beneficiary, they want the pickup truck. And so we're going to give the pickup truck entirely to that beneficiary. The pickup truck's worth something, and an appraisal helps us establish that value for distribution. Maybe the pickup truck is worth $10,000. Well, that can be part of that sibling's share, and then we can adjust and give other assets to the other beneficiaries. So appraisal helps us do those four things. We can establish our new tax basis, we can figure out a fair value to sell the asset, we can set up our distribution value, and generally protect our trustees from claims that they are setting values too low or too high. So that's why we might do appraisal. Now, how do we appraise a trust asset? Well, there are some trust assets we don't need to send to a third-party appraiser. For example, cash, obviously, if there's cash in a safe deposit box, or if there's cash in a safe at home, or if there's a checking account or a savings account, the trustee can just obtain the bank statements as of the month of the date of death, and then look at the bank balance on that date, and then you can appraise the cash. Obviously, there's not enough of a fluctuation in that value to cause us to have to hire a third-party appraiser. But for real property or stocks and things like that that have fluctuating values, we want to get a licensed appraiser involved and protect you from claims that might be made from the beneficiaries that would say, well, you appraised it too low, or you sold it too low, or whatever. And so a lot of people ask, well, should I just use a local real estate appraiser? And of course you can. I mean, you're the trustee, you can do that, but a local real estate appraiser is a licensed appraiser, but they are also generally limited to real estate. And they're also more expensive than the alternative. And the alternative is an appraiser that has a special title, and that title is called the probate referee. Now, what is a probate referee? Well, that's a fancy legal industry term for a licensed appraiser who is appointed by county in California, and they are established as an officer of the court. They're independent, they're neutral, so there's no way anybody could claim that the appraiser was partial to you, or a friend of yours, or an old college buddy or something that was fudging the values. A probate referee is a true neutral officer of the court. So that's an advantage. The other advantage is the probate referee has experience in appraising all kinds of assets. They appraise real estate, different kinds of real estate, land. They can do personal property, furnishings. They can also do stocks, bonds, mutual funds, farm equipment, you name it. They can appraise it. And they have experience appraising all of those things. So it's really great to have somebody who can do it all, and you don't have to go get different appraisers for every different type of asset that you have in your trust. And then the third thing about a probate referee that's handy is that they charge fees based on the percentage, a small percentage of the asset value. So compared to a private appraiser, they're much less expensive to do all this stuff. So it's a really handy option to be able to use the probate referee. How do we find the probate referee for the county that we live in? Well, there is a website, and it's called probatereferees.net. And I'll say that again, probate referees with an S at the end. It's all one word, .net. That is the website for the California Probate Referees Association. And you can go to that website and click the search function and enter your county, Fresno or Contra Costa or Santa Barbara, whatever county you're in, and it will tell you who the appointed probate referees are for that county. It'll give you their email and their address, and you can contact them and request an appraisal. We'll talk about how in just a second, but in order to request an appraisal, you've got a form called a request for inventory and appraisal. That very form is on that same website. If you click forms on probatereferees.net, there will be a request for inventory and appraisal, and you can complete that. There's even instructions on there how to complete it and how to fill it out. And so that is the way that you would request an appraisal from a probate referee. If you use a private appraiser, I'm sure they have their own forms or whatever, but I would suggest that people consider using the probate referee for an appraisal. It's a very handy, very cost-effective way. It's relatively easy to do. So a couple of tips about appraisals before we wrap this up. Get your appraisals done early in the process. And the reason why is because we're going to have to liquidate assets, we're going to distribute them eventually. We don't want to have to try and figure out values later on. So the earlier you can do your appraisals, usually the better. If you don't have all of your assets yet, for example, maybe you have a piece of real property, but you haven't collected all the other assets and marshaled them in, then I would suggest considering doing a partial appraisal. So you can actually send off to the probate referee and say, hey, I'd like to just appraise this piece of real property. We're going to call this appraisal partial number 1. And that way they can get that property appraised and get the appraisal back to you. Usually takes about 3 or 4 weeks, depending on how busy they are. But that's a handy way to get a value quickly for the real estate so that you can get the real estate listed and on the market before you've collected all the other stuff. So a quick review. Once you've been installed as the trustee and you've sent out notices and you've collected assets, your last step in phase 1 of trust administration is to get those assets appraised. You can personally appraise cash and checking and savings accounts, but suggest you use a licensed appraiser. Probably the probate referee is a good choice to appraise your real property, stocks, bonds, and mutual funds, and so on. Try and get those things done early in the process and establish that value so that you are insulating yourself and protecting yourself from beneficiary claims that you might have values too low or too high, and you know that you're selling it for a fair price. So hopefully this video was really helpful for you. Remember to click subscribe to be notified of future videos as we send these out in the series. And for those of you who are commenting on our videos, we appreciate it. And if you have a particular topic that you would like to hear about in the future, just add that in the comments section below. And I look forward to seeing you in future videos.